Greetings. Today we are going to be talking on something very, very salient, something very, very useful, something very, very important, and it is called trading divergences. Remember, this is a work on forex, stocks, options, crypto, and all chart related trading. Traders often ask, how can I know when the trend is changing from the top to the bottom or from the bottom to the top so that I can catch and enter the trend as early as possible? This is very, 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 very possible. And this is what trading divergences is all about. Remember to subscribe, to click the subscribe button, to like, and to share this broadcast to encourage just do more. Trading divergences help to sell near the top and buy near the bottom. It gives us a perfect point to exit trade ahead of time. It is seen by comparing price action and the movement of an indicator. And any indicator can serve as divergences. We can use RSI, MACD, stochastics, etc. So usually price and oscillators. When I say oscillators, I mean MACD or RSI. Price and oscillators often move hand in hand, that is, in the same direction. When price, for example, makes a higher high, just like this, as demonstrated in the chart, you see price is making a higher high, moving from one high to another high. Oscillators also do the same thing. They are making higher high. You can see price is making a higher high. Oscillators are making what? A higher high. High from one point to the other. So when price and oscillator move hand in hand, if price move higher high, oscillators also move higher high. When price move lower low, see price moving lower low, oscillators also do the same thing. They move lower low. They move lower low. So that is the natural way price and oscillators operate. But if not, it means price and oscillators are diverging. If this is not the case, it means something is happening and price and oscillators are diverging from each other. This signals that something fishing is going on, so pay attention. It means that something fishing is going on, so pay attention. So let's look for a chart demonstration of where these divergences has occurred, and let's see what eventually took place. Take, for instance, under this condition, if we take a look at this chart, we discover that price is making a lower low and divergences, oscillator at this junction is making a higher high. You see, price is going down But oscillator, the MACD oscillator is moving what? Up. It shows that a divergence is taking place. Something is about to happen. They are moving in opposite direction. While price is going down, oscillator is moving up. It means that the trend is about to change. And what happened eventually? You see the price went up. Market went what? Up. That is what happened. So divergences enable us to spot the bottom or top of a trend. It tells us the exact time that a trend is possibly exhausted. So let's look for other examples. Let's scroll down the chart and find other examples of divergences. So if you look at this chart down here, you find a very beautiful example. You see at this point, price was moving up, then oscillator was taking the opposite direction. You see, price was moving up, but oscillator, which is the MACD, was going down. It's an indication that this price movement is about to be exhausted. And at this point, what happened? You see that price went down as far as to this point. So that is what divergences does for you. It helps you to know when the trend is about to be exhausted and the best time to get into the trade. The question we should be asking at this point is that, how do we trade divergence and momentum tricks? When you spot divergence, look out for other signals, reversals, like candle patterns, such as tweezer or a bullish engulfment. If you look at this point, for example, where these two lines crosses each other, you see that the candle pattern at that point is a shooting star. In a shooting star, it's an indication of a reversal. It was followed by a candle that went below the shooting star. These are the signs you should look out for. Another thing you should look out for is wait for the oscillator to cross over. For example, stochastics. You can introduce stochastics at this point. You see our stochastics here. You wait for it to what? Crossover. At this point, it was able to what? Crossover. You see the green line crossing over. The green line is crossing over what? The red line. And it confirms with this red candle. And wait for the candle again. Wait for the candle to confirm direction. You see that this red indicating a down candle has also confirmed the crossover of the stochastics. Another point to look out for is to wait for the oscillators to leave overbought or oversold direction. If you want to a little bit patient, you can wait for the stochastics line to go below the 80. That is the overbought and the oversold direction. So in this case, if the trend is reversing down, it has to go below 80. But you don't necessarily have to wait for this But if you want to be very, very sure, you can wait for it to go below what 80 and enter at this what candle. Another signs to look out for is to draw trend lines or momentum indicators and price. If both respect trend lines, then it might be a confirmation. That is what we've done earlier. We drew this line and we drew this line on the MACD. So we draw a trend line on the price, and we also draw a trend line on the MACD, and we discover that both of them are in opposite direction. So that is one of the major confirmation you need. So if they are both in the opposite direction, and look out for other indicators like candles, confirmation, and confirmations from oscillators like stochastics crossover. Then take your trade. However, you are advised to use divergences on higher time frames like 1 hour, 4 hours, daily, and avoid it on lower time frames like 5 minutes, 1 minute, 15 minutes, 30 minutes to avoid fake outs. But this is not to say that they are not effective in those time frames. But as much as possible, it works better in higher time frames. So divergences is a very, very powerful tool. It enables you to catch the trend at the top or at the bottom. So when next you are trading, always look out for divergences. It is a secret to huge trading profits. Thank you very much for listening to this broadcast. You're advised to subscribe by clicking the subscribe button. You're advised to share. You can contact us for account management from any part of the world. You can email us or WhatsApp us on 080 375 97085. In proper sense, +234 803 375 97085. So that is our contact number, or you can simply call us and discuss business with us. Thank you.